not. Though we may have one or two members may still be in transit. We've got two people online. We've got Mike and Stuart online. I think Mike can hear us very well, and you can see him on screen. We're still trying to contact Stuart. We don't know whether he can actually hear us or see us, but we're going to carry on anyway and message as we need to. So the usual housekeeping rules apply, though we don't have any members of the public in, so I can skip where the facilities are. I'll take it that members have read the papers this evening for this evening's meeting. We've only got one main agenda item, so there's this extraordinary meeting. It'll be mainly input from Ernst & Young. But I hope that we have this is Councillor Ali has now joined us online rather than in the room. Hopefully, Councillor Ali, can you hear us? No, he's looking at us. Okay, I'll let you message him. Do you do apologies for absence then? So, any apologies for absence?
Thank you, Chair. I've had apologies from Councillor Jackie Allen and Councillor Sainsbury is attending as substitute.
Great, thank you. Item 2, declarations of interest. Does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest? If so, can they raise their hand now? I see no hands, so we'll take that as no. Thank you. So that takes us on to item 3, the main item in this meeting, which is the audit of statement of accounts to those charged with governance. So it's the ISA or ISA 260 report. I think, Neil, if we can ask you to present it. Everybody's seen the report, and I personally found it actually quite a clear report and quite concise. The executive summary works quite well. So if I can I ask Neil if you can take us probably through the executive summary at that kind of level, and that should give us plenty of time for some questions afterwards as we go. Marvellous. Okay.
Right. Okay.
Thank you.
Thank you, Chair, and good evening, members. So you've had various verbal updates from external audit on our progress of the external audit of Peterborough City Council's accounts for financial year ended 31st of March 2021. I'm now pleased to attach our audit results report, which provides our provisional audit conclusion on our external audit of the Council's financial statements. As the Chair said, I hope you've had an opportunity to read the whole report, because this is quite a lengthy report, so I really don't propose to go through this page by page, but I think it's just worth drawing attention to the fact that at the date of this report we are substantially concluded with our external audit of the Council's accounts. The areas that I think we're still finalising at the moment is just a final assessment on events after the balance sheet date and final revisit of the group boundary assessment to consider the Council's interest in the Empower arrangement up to the point at which the Council took the assets back in-house. And obviously some of those events happened after the balance sheet date, but what we're just trying to make sure we've established clearly is there were no indications that the Council had degree of control and ability to vary the benefits around Empower up to the 31st of March 2021, such that Empower should actually be consolidated into the Council's group accounts, and the valuation of the solar panel assets should actually be on the balance sheet. So that is an area that we are finalising. We've had an updated group accounts assessment from the officers, and we've got a specialist in our financial reporting team that's working with myself and the external audit manager to conclude on that before I leave EY. We're also concluding consultations with our professional practice team on 2 areas, one of which will lead to a modification to our audit report. The first is on the fact that we are expressing in the 2021 opinion significant weaknesses in value for money arrangements in 2 areas, one of which is the financial sustainability and of the Council up to the 31st of March 21, which I think has already been very well publicised at the time and led to the going concern disclosures and our opinion last year. But the consequence of that is that arrangements, we believe, had significant weaknesses in the period up to 31st of March 21. And we've also commented on the fact that there was an impairment of the Empower loan of 2.6 million, and some of the refinancing and some of the arrangements associated with the refinancing decision, we believe, had some elements of weaknesses attached to them, and that's set set out in our report. So our final report will include some of that exception reporting on value for money arrangements. The second area is that we're just concluding consultations with our professional practice team on the Council's going concern disclosure, which looks out 12 months from this particular date. And that looks at the robustness of the Council's sort of forecast budget position, level of reserves, robustness of the savings plan, but also whether the Council has sufficient cash, either liquid cash or ability to borrow, and has sufficient headroom to maintain continuity of service provision. Now, our provisional position in EY through the audit team at the moment is we now believe there are no material uncertainties that need to be disclosed in the Council's accounts associated with going concern. We're just concurring that position with our professional practice team so that the material uncertainty that was present last year can now be removed. If there is any change to that, then clearly it will be for the person taking on this audit, Janet Dawson, to come back to you and explain any changes from this point. But we are just finalising our consultation processes, and I've been responding to comments on that just this week. The other substantive area that I described last time was the national position on the accounting for infrastructure assets. I know we've discussed this in some detail last time. Following that, the Council have taken a lot of proactive steps with SIPFA and in dialogue with us to ascertain what records currently exist on infrastructure assets, the subsequent capital expenditure, and the process for derecognition of assets where expenditure has been to replace parts of infrastructure assets. We've reached a position where the Council the officers have taken a decision to delay the conclusion of the 2021 accounts until there is a final resolution from SIPFA on the accounting challenges for infrastructure assets and any statutory prescription that's introduced by central government as well. So we hear there may well be a statutory override that's provided in this area and a final SIPFA resolution, all of which then would need to be reflected in your final set of accounts. The difficulty we have, I think, both the officers and the external auditors, is we don't know when that's going to happen. We don't know when that's going to be put in place. We also don't know what it's going to look like yet, such that the Council can take a view on what steps they need to take to update the accounts and the audit implications of those changes. What it does mean, though, is the Council's made a conscious decision, the officers, to delay the conclusion of the audit pending that. The other option was to receive a qualification from ourselves on the basis of a limitation of audit scope, which is effectively for us to say there isn't sufficient and appropriate audit evidence to say that the Council currently complies with the SIPFA Code of Practice as currently drafted for accounting for infrastructure assets. The Council's position, I do understand, is not to wish to take a qualification at this stage. I understand the reasons for that. But I think this committee needs to know that obviously that delays the conclusion of the audit to the point that I can't sign this before I leave, and I will be handing over to Janet Dawson, who is our government and public sector contact partner in EY and responsible for the work we do in EY on public sector audit. So you have the person that leads our work that's going to be picking up this audit. Janet's obviously got huge experience on public sector external audits and has already been briefed on where we are with the audit to pick things up from here. Janet will obviously have dialogue with you as an audit committee about the steps that need to be taken to conclude the audit, obviously one of which is the resolution of these outstanding matters and the infrastructure position. But also Janet needs to re-review the whole audit file and make sure she's content with the judgments that I've reached. And there may well be actions that we're taking following our external review from the Financial Reporting Council we need to address before we've issued our audit report as well. And if you recall, the FRC have been looking at our work on the 1920 audit, so there may well be actions that come out from that we need to make sure we've addressed before we conclude. So that's I'd like to think, Chair, the executive summary about on where we are with the audit. The detail of the audit results report, you'll see that we have a number of corrected audit differences, some uncorrected audit differences, and we have gone into some considerable detail on the problems that we identified on the valuation of the Council's assets. You'll see that the extent of amendments that were made to the financial statements as a result of our challenge on the valuation assumptions, and we've included a separate appendix actually listing out some of our concerns on the control environment for the recording and evaluation of assets, which we hope is helpful for you as a committee to see some of the concerns we've had during the audit and how they need to be addressed going forward. Apart from that, I think I'm going to pause at this point, if that's okay, because there's a lot in this report. I'd like to think I've just drawn out the key messages and where we are. Clearly, you get a commitment from EY that as soon as we're in a position to issue our audit opinion on the 2021 accounts, we will seek to do so. And I'm sure Janet, when she comes to this next committee, will be very clear with you on the timetables we're working to and any changes that need to take place from the report you have here. And before I open up for questions, I do want to thank the officers for all the cooperation and assistance that I and my team have had throughout the course of the audit. To thank you as an audit committee for your engagement with me, and that's not just in the last few months, but over time as well, since I've been the key audit partner on the external audit for Peterborough City Council. I'll pause because, as I say, there's a lot in this report, and I propose not to go through it section by section. I'm happy to take any questions.
Thank you, Neil. The executive summary seems quite clear. We don't have the remote people back on Teams yet. We're just going to work through the technical issues, but I think we should carry on, and then we'll try and catch them later on in the meeting. But I think it's fair to say that there's nothing wrong with the accounts. The delay is more of a technical delay and a technical issue. That we're waiting to sign, and the council, I think, has quite rightly said we don't want qualified accounts, so we'll wait for the statutory override before we can make a decision. Before we can finally sign them off. So I think in the scheme of things, the actual audit's gone very well. Where issues have been raised, they've been adjusted, they've been taken into account. So this committee can take some confidence that the numbers that are contained therein are fine. So I think now's the right time to open up to questions. Any questions that people have got. What I'd like to do at some point is just go through the actual paper of agenda item 3. But if we take any sort of immediate questions first, and then we'll just canter through the paper, and in particular, I think I've got section 4.15 that I just want to check a couple of things. So, Councillor Rangton.
Thank you. Just a bit confused. What is the deadline for the submission or completion of these accounts? I'm just confused that we're dealing with 2021 tax year.
It's I suppose technically in EY. I think we've had the view for some time that there isn't actually a deadline, there's a target for the conclusion of the external audit of the financial statements, and for the 2021 financial year that was the end of September of 2021, so you can see that we're quite some distance behind that, but that is not inconsistent with a number of other local government audit opinions across the country at the moment, particularly those that are impacted by this issue on infrastructure assets.
I think it's also fair to say that these accounts were published on time.
Yeah.
The draft accounts were published on time, so they've been in the public domain and have followed the timetable as much as possible. It's this final concluding event that other councils are in a similar position with that we're waiting for, if that helps. Councillor Sanford?
Yeah, just following on from that actually, are there any consequences for the council in having the publication of its accounts held up by such a long period? Either practical consequences, or could people draw inferences from the fact that we've not finalised our accounts?
I mean, there's no financial consequences. Practically, I think, Councillor Stanford, all of your points are well made. There's always a question that could be raised of both of the council as to why the accounts haven't been audited, and especially over a long period of time, that could cause reputational questions on the council, as it does for any other council that's in this position, which is why I come in front of these committees with the officers to explain the reasons why the audit is where it is at the moment, so that the council is able to proactively deal with any questions of that nature. Obviously there will be some organisations where actually it's not because of a national issue why the accounts are so delayed. There could be fundamental concerns on the quality of the accounts, the quality of the systems and processes. We're not saying that in this case. The reason why we are where we are is largely now because of this national issue on infrastructure assets. I'd say the resolution on the Empower arrangement is partly connected in with the fact that we've had a review of the external review of the audit we did in 1920 as well.
Okay, I'll just ask Cecilia to respond as well.
Yes, thank you, Chair. I have spoken to a number of CFOs for other unitary and county councils as well to see what they are doing. This particular issue is affecting a number of local authorities. Some have said they are likely to go for a qualified opinion, but mainly if they have other qualification issues as well. So this is just adding to the problem. SIPFA have been extremely supportive in trying to get us the statutory override that we need. They also offered to help us to collect all the working papers. We had a meeting with SIPFA and with Neil and Dan and the finance team to see whether we could actually dig out all the papers, provide all the working papers. I think we just agreed that the task was too huge, both in terms of collecting the information and for the auditors to go through it. So we're in the same position as a number of other authorities who have the same issue. And from a personal point of view, and Chris and I just discussed it as we went into the meeting, probably from a reputational point of view, I think it's far more damaging than to get qualified accounts than to wait until we get the statutory override, or until we wait until we have no choice. So we from a personal point of view and from the council's point of view, I think the risk is greater with going for qualification.
Okay. Thank you. Councillor Nawaz.
Thank you, Chair. A couple of questions. I think the first one probably by Cecilia. Accepted. So, is there any on our credit rating and our ability to borrow more funds?
No, absolutely not. It's the council's credit rating. The council's credit rating is the same as the government's credit rating. We are in effect the same. We don't have individual credit ratings, but we come under the government umbrella, and it has absolutely no impact on our perceived credit rating in the market from the market or from other local authorities. There are at times, if we have local authorities who have maybe a poor reputation for other reasons, some other local authorities might be less keen to lend to them. I think personally I think that's wrong, because local authorities don't default on their debt obligations. The government would step in and bail us out. But I think that's more a perception issue, but absolutely not. It's not had any effect at all.
Thank you for that. You talked at quite some length about value for money, which is obviously an important aspect for the council and as for us as councillors. And I know you've made some recommendations. And I'm not too sure if it's within the scope of your engagement, but are there any additional steps or changes or improvements in systems and processes that you'd like to see the council taking so that we're in a better state going forward?
I think the difficulty with the timing of this report is that the value for money arrangements is looking backwards. So we are commenting on weaknesses and arrangements that we saw in the 2021 financial year, of which we can see a lot of activity has happened since around the turnaround plans, some of which we've looked at as part of our work on going concern. We obviously have commented on the arrangements where there are more complex, unusual commercial arrangements like Empower. Yet we looked at the Hilton hotel development and the financing of that to see has that replicated in that situation, and we took the view that it hasn't. But I would always say, and I think the Chair has put this as a future agenda item, perhaps on Empower, but just more broadly around commercial arrangements that the Council has, I would say that's always an area just to be aware of and aware of the risks that the Council is taking around decisions of that nature at the moment. Given that council's recovering from a precarious financial position, what it doesn't want to do is expose itself to any unnecessary risk on commercial arrangements that may come back to bite the council in the future. And so the Empower one was an unusual one. I think the council have taken a decision to bring the assets back in-house, and a lot of council are looking at different options on commercial activity. I would probably just say that council should just tread carefully and cautiously on those areas going forward until such a point that your financial position has stabilised.
Thank you.
Yeah.
Okay. Question, Councillor Rangzone.
Just one more other question. On the executive summary page 10, I'm just a bit confused on this. Collection fund council tax receivables. We identified a transaction error. So disclosed is 109 million instead of 101.9 million. Why is this difference, and has this been accounted for?
Neil, you can take it, or Cecilia, because this is one of the errors that was picked up and then corrected.
Yeah, I mean, it's part of one of the disclosures in the council's financial statements, and sometimes we identify what's called transposition errors. So it actually doesn't impact on the balance sheet or the income and expenditure statement per se. It doesn't impact on the bottom line position of the council. But if we can see that the disclosure, and there's what's called a transposition error, and you can see that it should be 101.933 million rather than 109. That's effectively what that is. But because it's material, we need to make you aware that came from the audit and has been corrected.
So the short answer is it was a typing error that was corrected rather than anything financial. Okay. I'm conscious of our members that are online who've been listening intently. Do you have any questions at this particular point that you'd like to bring into the meeting? Oh, ask again. Oh, sorry. For the members online, is there any questions that you have of the meeting at this particular point in time? And apologies for the technical issues. Hopefully you can hear me and you can also talk to us.
Hi, Chris. Just checking. Can you hear me?
Yes, I can, Councillor Ali. Yeah, I can hear you fine.
Hi, yeah. I had a question. It's a bit difficult to take part online because we've had a few technical issues, but I wanted to just ask a question on page 36 of the E&Y report. There's a number of disposals that were either incorrectly reflected or reclassified. There's a number of items it's talking about on page 36 of the report. Assets were disposed, but they were still appearing, and they were an overstatement on the PPE. If you look further down, there was a number of others, and it was talking about misallocations. I guess my question is, off the back of what E&Y have looked at, have we now correctly allocated the different assets, and are we right that we've got the correct total assets, or has this led to a misstatement at all?
From an EY perspective, we've obviously done a comprehensive review of the asset register and the completeness around disposals, and also you'll see various adjustments, as you say, Councillor, on the valuations. Obviously, we're satisfied now with a set of accounts that have corrected for all of those items. It's perhaps for the officers to confirm going forward how they would be addressing what's led to some, quite, I would say, a number of findings relative to what I've seen in other councils in this area. Yeah.
Thank you, Chair, and thank you, Neil. So the council had previously outsourced the whole of the property function to MPS, and the council had very limited oversight over the valuations, how they were procured, and had little expertise and skills in-house to be able to verify the valuations as well. That is all changing. We have given notice to MPS, and we've taken the property service back in-house from the end of June 2023, and we are currently out to market to appoint a new director of property services and to transfer some of the MPS staff back in-house, as well as going out to recruitment for a number of new posts as well. So the property function has been strengthened considerably. It will also give us more ownership over which surveyors and valuers we're using. We have been using some national firms more recently who have given us some really good services. So not being so reliant on the services provided from MPS will significantly improve the overall ownership of the property portfolio and the valuations, both for disposal and for accounting purposes.
Thank you to both of you for that. Just a very quick follow-up, specifically on the community centres. The comment in this report says it was incorrectly valued using EUV methodology as opposed to DRC valuation methodology. I don't know what those specific methodologies are, but is it clear which process we were going to use to value these community centres going forward? And are we agreed?
Neil, do you want to take that one?
So I think the first thing to say, Councillor, is that on the community centres that the DRC valuation is depreciated replacement costs. So we would say these are more specialised assets and don't have service potential as community centres, and that's how we believe that they should be valued. Again, we're satisfied that that revaluation adjustment has been made in the 2021 accounts, but we would expect these type category of assets to be valued on that basis going forward.
Thank you.
Yeah.
Thank you, Chair.
Okay, thank you. I've got Mike online who wants to ask a question, and then we'll come to you, Councillor Sanford.
My question was on the same point.
Oh, okay. Okay, then we'll follow on with Councillor Sanford if you could just hold with us, Mike.
If that's okay, because I wanted to follow on with the question about the asset valuations, because if you look in Appendix A of the report, there's like 2 pages of a whole series of sort of actual errors that MPS committed in terms of valuing council property, and we've seen some practical implications of that in terms of the whole saga about the hydrotherapy pool, part of which was an issue of how much the hydrotherapy pool was actually worth. There's also the case that was highlighted at the last full council meeting of the Hope Interaction application to purchase a piece of council land, which they were told they could have for 0 cost, and they've now been told it's worth 150,000. So these errors that the MPS committed seem to have cost the council certainly a lot of administrative costs. So is there any possibility that the council can claim some compensation for the problems that have been caused?
I don't think we can solely blame MPS for everything. I think the Hope into Action issue in particular was around a promise that had been made by officers who probably weren't authorised to make those kind of promises without evaluation. So MPS wasn't at fault there. With the hydrotherapy pool, it wasn't so much around evaluation, it was the viability of selling off a piece of a potentially valuable asset for future reference. I think it's fair to say that it was a difficult issue, but I don't think we can blame MPS for that one either.
So I think just to follow up on that, can this committee have confidence that those sorts of issues won't be rising again as a result of the changes of bringing the property services in-house?
I think definitely with the arrangements we have now, I think the message is quite clear now that the council is not in a position to give away assets for nothing, and we get independent valuations for everything. We had a planned fire sale when I came here in January. That didn't go ahead. We didn't need the cash and we didn't dispose of assets in that way. And as long as I'm here, I can promise that there will be proper market valuations for every single asset that is being put forward for disposal.
Okay, thank you. Mike, I think we're now ready to take your question if the technology works.
Thanks, Chris. Can you hear me? Okay. I think my question is really, what are the next steps with this EY report? So it's presented as an incomplete audit. We don't have a final opinion yet, but I just wondered whether this was now their final report on the 2020-21 year, or whether there was going to be a final update to this when they'd completed their audit, and whether this report was going to be published. And I think my reasons for asking these questions are, I was very concerned about the presentation in Appendix H, which is their analysis of the MTFS, because clearly that appeared to be still based on last year's numbers rather than on the most recent MTFS. And if this was going to be their final report that we were then going to publish, I would expect this to be based on the most recent MTFS rather than one that was now 15 months out of date. And indeed, I'd also expect their audit opinion and their going concern assessment to be based also on the most recent MTFS.
Neil, do you want to take that?
So three things I would say. The first is this: this is a substantially complete external audit, but it is not our final audit report because of the outstanding issues, particularly on infrastructure assets and a couple of other points I've raised in my introduction. And because of the handover to Janet Dawson, I think it would be appropriate for the Audit Committee to receive a final audit results report from EY before we issue our audit opinion. And obviously it'll be a matter for Janet to agree with the officers and through you as a committee on the best governance process to do that. But given the outstanding matters on infrastructure assets, I would anticipate it be coming back to this Audit Committee before the accounts are authorised for issue. I do recognise the points on Appendix H, but we do put some context on this, is that the reason why we're including that text in this particular report is it's supporting the reason why we've got significant weaknesses and arrangements for value for money in the 2021 financial year. What I'm very content to do is, given the Audit Committee are aware of now why we've reached this conclusion, that analysis at Appendix H could come out of the final audit results report. I do want to reassure in response to the question that the work we've done to reach our view on going concern has looked at the latest MTFS, the latest cash flow forecasts, and I'd be very happy to work with my team and as a handover to Janet to see that our final report includes some additional commentary on where our final position is on that and the basis on which we've arrived at that conclusion. As I say, our provisional conclusion is that we believe that there's no material uncertainty in the continuity of service provision there, based on what the Council have disclosed in their accounts, which would be a significant step forward from the position we reported last year. But I understand the point that the member's making, and I'm very happy to work with my team to make sure that we provide an updated analysis. We did have a specialist team that actually reviewed the latest MTFS earlier this year, so we do have a report that could come back to this committee with our analysis of that, but we can provide more commentary on how we've arrived at our final position on going concern as well.
Thank you for that, Neil, but what you just said there in terms of going concern doesn't strike me as entirely in line with what's written. So what I read in your report was that you were not able to report on that, and there could potentially be material uncertainty, whereas you've now said you've looked at the more recent MTFS documents, and that really puts the nail on my concern here, and I would certainly welcome the removal of Appendix H, and I think you need to be quite careful on what else is said around going concern, given the difference between what you've said to us verbally here and what you put down in writing in this report.
Well, I'm trying to dispute that. I'm very happy to go back to what I've said in the report, but we did say that the work on going concern was subject to our professional practice consultations. I did say in my introduction that that process has actually been ongoing before this meeting, so my position is a verbal update on exactly where I've got to with our professional practice team as of now. It's not a final position, and I'm very happy to come for our final audit report, results report, to set out that final position once it's been signed off from our consultation processes. But I'm providing the Audit Committee with the very latest position on the steps that we've been taking as set out in this report.
Okay, and I think the expectation of a timetable is to finalise this by the end of 2022 without having any sort of targeting
I think
particular
that's what-
dates, but to manage expectations sometime in the next 5 months.
Yeah, I think that's our I think we're all working towards that goal to get this done this side of 2022, because then the intention is to move then straight on to the 21-22 external audit of accounts thereafter.
Right, thank you. Okay.
And could we just ask Cecilia, just to clarify, so what will now happen to this EY report? Is this just something we discussed at this meeting? Is this something that will be published as an interim audit report, or how will this be dealt with?
I'm not sure that we will publish this report or do anything until we get the final audit opinion. I'm looking at my colleagues here. I think we're all of the same. Chris and I discussed whether we needed to go ahead with this meeting or not, since we're not getting the audit signed or the accounts signed off. And we decided to go ahead, so from an audit trail point of view, we will have a record of this meeting being held, and that all members understand why we're not getting the audit signed off quite yet. But we won't be looking to publish the report at this stage.
Okay. That's perfect. And I think I'd also like to see the minutes very clearly note that with regard to Appendix H, we concurred with the suggestion from the external auditors that this could be removed, because it was based on out-of-date numbers and misleading, and I think we should minute that offer and confirm that the Audit Committee agreed with it, and that we would look forward to a final report at a later date from EY.
Okay. Thank you, Mike, for those comments. I'm not sure we use the word misleading. I think that's right. I think the report was right, using the information at the time. So we won't use misleading, but we will put a summary in the minutes. Now we're on to Councillor Sanford.
Yeah, and I think that's probably a wise course of action, what is proposed, but I don't understand the point about this report not being published, because it has been published, because it's on the council website. So.
Yes, and I think the reason for holding this meeting as well was so that we would be transparent to everybody in terms of exactly where we're at, exactly what the views are of Ernst & Young, the fact that there is nothing actually now wrong with the accounts. We're waiting on a statutory provision in order to be able to have an unqualified set of accounts, and we've also got a change of audit partner which is causing a bit of extra work to be done. Okay. Okay, I'm getting a sense of not many more questions to come through. So I wondered if I could just have a quick look. So in the paper, we're asked three things. To receive and approve the audit results report for the year ended 31st of March from Ernst & Young. To receive a note that the Council have opted to delay the signing of the 2021 Statement of Accounts, which is something that we've just been talking about, and waiting for the outcome of the SIP for consultation. The third point on here is to delegate to the Chairman to approve further changes if needed. And I think that's basically to avoid us having another extraordinary meeting for something which we hope we can resolve the matters very simply. So those are the three things that we've been asked to comment on. There was something I wanted to do just on of the paper. There's page 6, paragraph 4.15, just takes us through the report again. It takes us through the different sections of the report, and I thought it was just worth having a canter down that to make sure that we're clear that we've covered all of the different aspects. So we've been through the executive summary. We've had a chance to look at the areas of audit focus, a copy of the audit report, the audit differences. It's always frustrating when auditors find things wrong with the accounts that need correcting, but it's also quite encouraging that the team recognise that and make the corrections and learn from it and improve the internal controls around that. So it's quite normal to see that, and also quite encouraging to see that that's been done. We've talked about the value for money aspects. And I think the fact that the conclusion has been modified to recognise the structural financial pressures of the council from COVID-19, etc. So we'll see what conclusion we finally get with value for money. The assessment of the control environment. I think we've raised some interesting points in this meeting, and there were, I think people were expressing concerns that have we got the right internal controls now to stop things happening again in the future. And I guess from this committee's perspective, hopefully the finance team have spotted where the controls can be improved. I'm also mindful that this is from nearly 18 months ago now, and we've also had another audit since then. So a further opportunity to improve internal controls. So I think that can come through. On page 7 of the paper, paragraph 4.16 talks about the management response to the audit findings. And again, I was encouraged to see all the different aspects have been management agreeing with Ernst & Young to adjust the different items, the recommendations in there. And that management have confirmed that the council has opted to delay the signing of the accounts until CIPFA's done. There's one that I didn't see, which I don't know whether it's just an exclusion because it's not very important. But page 58 of the detail talks about the school's payroll reconciliations and unallocated cash. And there's a recommendation for improving those, but there's no comment in here. So can I just check, have all of the recommendations been taken in? And it's just that it's just not made the paper. Yeah, so I'm getting nods from both Carol and Sean that indeed all of the recommendations have been taken into account. But I just wanted to check that. I'm conscious about writing the papers. Okay. So if we are content with the item, Councillor Sanford.
Yeah, just one suggestion to make. If we're going to look at the recommendations, and I'm quite happy for any changes to be delegated to you, but so that the committee still retains its responsibility for this, could you notify the committee of any changes that you do make?
Yes, I think Dan will hold me to account for making sure that anything that is suggested is said to whoever needs to know. Yeah, thank you. Okay. On that basis, then I think we are looking to receive and approve the audit results report, the ISIS 260 for the year ended 31st of March. Receive and note that the Council have opted to delay the signing of the Statement of Accounts, awaiting the CIPFA consultation, and to delegate to the Chairman to approve further changes if needed. So members, can we agree to these recommendations?
Sorry, could we include the words that members of the committee should be notified of the changes they make?
Of any changes that may be necessary? Yes, we can include those in the minutes as well. Okay, so all good. I'm getting nods, I'm getting thumbs up, no objections. I'm getting a little smile online, so I'm assuming that that's okay. So in which case, thank you everybody for your attendance. And I don't think we've got any further business for this meeting. No. In which case, it just calls on me to again thank Neil for again coming along to this meeting and for all the support that he's given. I've only seen a little bit of it, but I know that the team have seen his support that's gone on over many years, and it's always very welcome, I think, to get that external input for the team. So thank you very much for that, and we look forward to meeting your successor in due course.
Okay, thank you.
Thank you. Okay, our meeting's closed.
Thank you. Thank you. Thank you.
Okay, thank you.
Thank you.
Thank you.